Well, a very interesting note coming in from Sanjay Mookim of JP Morgan. They've analyzed the MSCI India index earnings growth forecast. They've gone ahead and said about how exactly they expect banks as well as commodities to actually outperform in terms of earning growth in the coming year. Also striking a note of caution as to how exactly investors should look at this particular earnings growth forecast and whether they can extrapolate it to the broader universe, which are the names that are expected to deliver strong earnings growth compared to the rest of the market, banks, their NPA cycles, all of these things have been discussed by Sanjay Mookim in this particular strategy note. Now, when you're talking about what exactly he's saying that the MSCI India earnings forecast imply a very strong earnings growth near term, but unlike commonly being assumed, it does not and is not supported by the weak base of FY21. A cyclical recovery in banking and near-term commodity earnings should drive better growth as far as earnings is concerned. However, investors, and this is something that he is striking a note of caution, he's saying investors should not extrapolate that to broader improvement as far as earnings trajectory is concerned. He's saying the economy will definitely take time to emerge and recover from the lockdown, while forecasts are for banks' profit to improve from 22% of the index in FY19 to 29% in FY23, while their market cap has decreased from 31% in FY19 to 26% now. What he is saying, that the MSCI India has not had earnings upgrade as far as the headline is concerned since the global financial crisis, that is FY11 or CY10, and the index has actually delivered a 5% CAGR EPS growth between FY11 to FY19 despite favorable composition as far as the index constituents are concerned. He's saying, what is it that is driving the strong growth forecast? He's saying on a weighted basis, Tata Steel, Bharti Airtel, Reliance, Tata Motors and ICICI Bank along with Hindalco are the ones that are expected to deliver approximately half of the index earnings growth in FY22 based on the current consensus forecast. He is also saying the profit of financials in the index is forecast to increase at a 26% CAGR over these 4 years, with the biggest absolute gains expected from HDFC Limited. He is saying that FY21 has opened a huge gap between economic versus earnings expectations. India's large cap earnings, dominated primarily by financials and commodities, have exhibited continued resilience and benefited from higher commodity prices. Overall, a slightly cautious note coming in as far as strong earnings growth recovery being forecast by analysts.